Elon Musk Investment Radio explores Elon Musk's decisions through a Japanese perspective, calm, long-term, and focused on patterns rather than noise. In Japanese culture, we often value consistency over statements, direction over speed, and behavior over words. This podcast applies that mindset to understanding Elon Musk as an investor signal, not a celebrity. Each episode quietly examines what Elon Musk does, how his actions connect over time, and what long-term investors might overlook when they focus too much on headlines. No hype, no predictions, just a different way of thinking. Hello, and welcome to the Elon Musk Investment Radio. This podcast looks at Elon Musk from a Japanese perspective, calm, long-term, and focused on patterns rather than noise. When most people talk about Elon Musk, they usually start with headlines, a tweet, a controversy, a sudden stock price movement. The conversation quickly becomes emotional. Some people praise him as a genius. Others criticize him as reckless or unpredictable. But from an investment perspective, this way of thinking is often misleading. In Japan, we tend to observe before we judge. We place more value on consistency than on strong statements, and more weight on behavior than on words. That mindset changes how we read someone like Elon Musk. Instead of asking, "What did he say today?" we ask, "What has he continued to do over time?" Instead of reacting to short-term volatility, we look for direction. This matters because markets are loud, news cycles move fast, social media amplifies emotion, and in that environment, long-term signals are easy to miss. Elon Musk operates on a very different timescale from the market that reacts to him. While investors often think in weeks or quarters, his actions suggest thinking in decades. That gap creates confusion. Many investors feel they are always late. Late to understand, late to react, late to decide. But the issue is not speed, it's perspective. When you slow down and observe patterns instead of headlines, a different picture starts to appear. This podcast is not about predicting stock prices. It's not about telling you what to buy or sell. And it's not about defending or criticizing Elon Musk. Instead, it's about learning how to read behavior over time. By looking at where attention, capital, and energy repeatedly flow, we can begin to see what really matters. Not just for Elon Musk, but for long-term thinking in general. In this first episode, I want to set that foundation. Before we talk about Tesla, SpaceX, AI, or any specific company, we need to understand how to look, not just what to look at. Because once you change the way you observe, the noise becomes quieter and long-term signals become easier to recognize. In the next part, we'll start with concrete facts, not opinions, not theories, and begin connecting them into a larger pattern. To understand Elon Musk, we need to start with actions, not opinions. Over the past 2 decades, Elon Musk has repeatedly committed his time, capital, and reputation to a small number of themes. These themes appear again and again, even when projects fail, stall, or face heavy criticism. One clear pattern is long-term capital commitment. In Tesla, Elon Musk stayed involved through years of losses, production delays, and near bankruptcy. There were multiple moments when the company could have collapsed, and many investors expected it to fail. Instead of stepping back, he increased his involvement during the most uncertain periods. A similar pattern appears in SpaceX. Before SpaceX became a symbol of private space exploration, it went through repeated launch failures. Several early rocket launches ended unsuccessfully, consuming large amounts of capital with no immediate return. At that stage, success was far from guaranteed. What matters here is not the outcome, but the behavior. Elon Musk continued to invest resources even when external validation was absent. This suggests a decision-making process that does not rely heavily on short-term approval from markets or media. Another observable fact is how Elon Musk allocates his attention. He does not spread himself evenly across many unrelated industries. Instead, his focus repeatedly returns to areas tied to energy, transportation, space, and artificial intelligence. Even when projects appear different on the surface, they often connect to similar long-term technological goals. There is also a clear willingness to absorb volatility. Public criticism, regulatory pressure, and sharp market reactions have been frequent throughout his career. Yet these events rarely lead to visible changes in direction. Strategies may adjust, but the core themes remain stable. This consistency over time is important. Markets often interpret volatility as uncertainty. But from a behavioral perspective, volatility can coexist with long-term clarity. Another factual point is how Elon Musk communicates. His public statements are often informal, sometimes contradictory, and occasionally provocative. However, when compared against his actions, words tend to have less weight than follow-through. This creates a gap between perception and reality. Many investors react strongly to what is said. Fewer pay attention to what continues to happen quietly in the background. Taken together, these facts form a simple but powerful foundation. Elon Musk commits for the long term, concentrates on a narrow set of themes, tolerates high levels of uncertainty, and maintains direction despite external noise. These are not interpretations yet, they are observable behaviors. In the next part, we'll place these facts into context, looking at why this pattern matters and how it differs from typical corporate leadership and market behavior. Now that we've looked at the observable actions, The next step is to understand why this pattern matters. What makes Elon Musk different from many other business leaders is not intelligence, charisma, or even ambition. It's the relationship between time, risk, and responsibility. Most public company CEOs operate under constant pressure to deliver short-term results. Quarterly earnings, analyst expectations, and shareholder reactions shape decision-making. In that environment, consistency is often sacrificed for stability. Elon Musk operates differently. His behavior suggests that short-term instability is acceptable as long as long-term direction remains intact. This is an important distinction. Instability feels dangerous to markets, but directionlessness is far more damaging over time. When we place Elon Musk's actions into context, we begin to see that volatility is not accidental. It is a byproduct of long-horizon decision-making inside short-horizon systems. This creates friction. Markets are designed to react quickly. Media is designed to amplify change. Social platforms reward immediacy and emotion. Against that backdrop, someone who thinks in decades will almost always appear disruptive, inconsistent, or reckless in the short term. From a Japanese perspective, this tension feels familiar. In Japan, long-term craftsmanship, slow refinement, and patience are often valued more than speed or bold declarations. Progress is measured quietly, over time, through repetition and improvement. When viewed through that lens, Elon Musk's behavior looks less chaotic and more patterned. The same themes resurface, the same types of risks are taken, the same willingness to absorb criticism appears again and again. Context helps us separate noise from structure. Without context, a failed rocket launch looks like incompetence. With context, it looks like part of an iterative system. Without context, production delays look like mismanagement. With context, they may reflect prioritization of long-term capability over short-term comfort. This doesn't mean every decision is correct, and it doesn't mean outcomes are guaranteed, but it does mean that actions become easier to interpret when we stop isolating events and start observing sequences. For investors, this shift is crucial. Reacting to isolated moments encourages emotional decision-making. Observing patterns over time encourages clarity. Context allows us to ask better questions, not is this good news or bad news, but does this change the long-term direction? Not what happened today, but what continues to happen even when no one is paying attention. In the next part, I'll share my personal interpretation, not as a prediction, but as a way of thinking about Elon Musk as a long-term signal rather than a short-term story. Here is how I personally interpret these patterns. When I look at Elon Musk, I don't see someone trying to be right all the time. I see someone trying to stay aligned with a long-term direction, even when that alignment creates discomfort in the short term. From my perspective, this is not about confidence. It's about tolerance. Tolerance for uncertainty, tolerance for criticism, tolerance for being misunderstood for long periods of time. Many investors assume that strong leaders always appear confident and consistent on the surface. But what I notice here is something different. The surface often looks unstable, while the underlying direction remains surprisingly steady. This is why I don't focus too much on statements or explanations. Words are often shaped by the moment. Actions, repeated over time, are much harder to fake. When I observe where time and energy continue to be invested, even when it would be easier to step away, I see a form of commitment that is not reactive. This doesn't mean I assume success. Long-term commitment does not guarantee positive outcomes, it only increases exposure. And that exposure cuts both ways. What interests me as an investor is not whether the outcome will be good or bad, but whether the internal logic remains consistent. Does the behavior still match the original direction? Does capital continue to flow toward the same themes? Does risk-taking follow a recognizable pattern? When those answers remain stable, short-term noise becomes less important. From a Japanese way of thinking, this feels similar to watching a craftsman at work. You don't judge the work by a single day. You observe how the hands move over years. You notice what is refined, what is abandoned, and what quietly improves. Applied to investing, this means resisting the urge to react quickly. It means accepting that clarity often comes later, and that patience is not passive. It is active observation. So when I look at Elon Musk, I'm not asking whether he will succeed or fail next quarter. I'm asking whether the underlying behavior has changed. So far, it hasn't in any meaningful way. That observation alone doesn't tell me what to buy or sell, but it does help me decide what deserves long-term attention and what can safely be ignored. In the final part of this episode, I'll talk about what I'm watching next. Not predictions, but signals, and how this way of thinking carries forward into future episodes. As we move forward, I want to be clear about one thing. I'm not watching Elon Musk to predict outcomes. I'm watching for signals. Signals are different from headlines. They don't announce themselves loudly, they repeat quietly. What I pay attention to next is not a single company or a single event, but how certain themes continue to connect over time. For example, I watch where long-term capital keeps returning, even when public interest temporarily fades. I watch which projects continue to receive attention during difficult periods, not just during moments of excitement. I also pay attention to how risk is handled when pressure increases. Does behavior change fundamentally, or does it adapt while maintaining direction? This distinction matters. Adjustment is normal. Abandonment is a signal. Another thing I watch closely is focus. When attention spreads too thin, direction weakens. When attention remains concentrated, patterns become clearer. This doesn't require constant monitoring. In fact, it often requires doing the opposite, stepping back and observing less frequently but more carefully. For long-term investors, patience is not about waiting blindly. It's about knowing what deserves attention and what can be ignored without consequence. In the next episode, we'll begin to look more closely at how this long-term thinking shows up in specific areas, starting with time horizons, why thinking in decades creates friction with markets, and why that friction is often misunderstood. If you're interested in a quieter, long-term way to think about investing, consider following the podcast. This show offers a Japanese perspective, focused on observation, patience, and consistency over time. Thank you for listening.